So Dan, when you were looking at Lessen, what about the revenue model excited you?
I think the thing with Lessen's revenue model is that it was actually very diverse. They had streams that were coming in as a margin on the overall project volume that you were doing, and we were also seeing that stream grow over time. I think also you're starting to develop this really sticky SaaS subscription offering as well, which is going to be recurring in nature, where the vendors and real estate owners that are actually on the software platform won't be paying you on a per project basis, but rather on a subscription basis to access the technology.
We recognized there were 5 revenue streams, 5. One of them is when the client assigns the job into the product. We actually take a margin on the job level. When the job is assigned to the vendor, the service provider, there's actually a fee that they're paying for use of the product and the ability to get them paid faster. The third item is the supply chain. We're buying bulk materials now, and so our spending advantage is allowing us to actually make margin on the dollars on the materials, the flooring, the countertops, the cabinets, the paint. The fourth item we actually make is like a SaaS, pure platform SaaS fee for groups that want to license our product and use it to manage their own outcomes of their properties. We just started exploring a fifth area, which is like marketplace operation fees, where we can insure our vendors, potentially provide financing to our vendors. So we're truly at least 5 revenue streams today. And we see that long term even getting more pronounced and diversified over time.
So for a 2-year-old company, your metrics are pretty staggering. Can you just talk about some of them?
Yeah, they are. We're impressed, we're proud. I'd say one of the key metrics is our revenue growth. We're predicting accurately 5 times revenue growth year over year for the next few years. Our capital partners are coming to our board meetings and shaking their heads saying, these are some of the fastest growing metrics we have of any portfolio company. We're growing our revenue month over month by 25%. So 25% monthly growth, and we're controlling the revenue. We're throttling it back because we just don't want to not perform for our clients. Additionally, we've hired 450 people in one of the hardest recruiting environments ever with almost 0 attrition. So across all areas of business management, we're hitting our marks. It's very hard to do, but it makes our board meetings a lot more fun to go and share those results, show the investors the capital is being spent wisely, and show that the business has long-term potential in the market.
As you've seen all this traction in the business, and now with $170 million, right, in your Series B, what's next for the business?
Look, I hate to say this, but it's going to be more of the same. Being predictable, hitting our numbers. So over the next 3 to 4 years, we see depth of growth in our current clients to increase. We see that new clients are going to enter and say, I'd rather just staff through Lessen instead of staffing it myself in more markets across all service lines. So Brendan, I'd say what we've learned over this last 2 years and looking forward, a decade, we see that there's no pronounced group that's willing to come compete with us. We're very aggressive about our future and hiring and expanding into our customers because we think it's a need that doesn't go away.